Rent-to-own agreements can be a great way for a person to buy a house without going through the traditional process of qualifying for a mortgage. While rent-to-own agreements can be a way that a person can move into the home a little quicker than going the traditional route, there are some risks involved with rent-to-own agreements, and in this video I am going to give you some pros and cons to those type of agreements so that you can decide whether or not a rent-to-own process or a rent-to-own agreement is right for you. Thank you for watching my video. I'm Tina Divine. I am a real estate broker in New Jersey. I have my own real estate company, Divine Real Estate. And in this video, I wanted to talk about rent-to-own agreements. First and foremost, what is a rent-to-own agreement? Rent-to-own purchases is where a renter can rent a property for a certain period of time, and then at the end of that period, they are then obligated or they have the option to then purchase the property. Rent-to-own purchases are great for first-time buyers as well as investors. The rental period could be anywhere from 2 to 5 years, and during that time, the renter/buyer is paying their rent and they're paying a little extra money every single month that is going towards the down payment of the home. At the beginning of that rental agreement, the buyer/renter also pays a lump sum of money to the seller as a option fee. That lump sum of money is also used towards the down payment of the home. So what are the benefits? What are the pros to a rent-to-own agreement? The first benefit to a rent-to-own agreement is you can move into a home much quicker than if you were to go the traditional route of getting a mortgage. You can also move into that home with little to no money down and with poor credit. Number two, a portion of your rent is going towards the down payment of the home. If you're someone who can't budget well enough so that you can save up the amount of money you need for a down payment on a home, rent-to-own agreements allow you to pay a little extra every month in rent, and that extra money goes towards your down payment. Number three, you can lock in a price for a home and potentially purchase that home with equity in it. So for example, if you buy a house and you negotiate the price of the house at the beginning of your lease period, and let's say you negotiate a price of $200,000 and the house is actually worth $200,000, but after your lease period, at the end of your 2-year lease period, the home value may have gone up in that particular neighborhood, and now the home is worth $225,000. You will be purchasing the home with $25,000 of equity already in the home. Number four, and this is probably the best part of a rent-to-own agreement, and that is everything is negotiable. There's no such thing as a standard rent-to-own agreement. All rent-to-own agreements are created by the parties involved, the buyer and the seller. Everything is negotiable. So now, what are the cons? What are the not so good things about rent-to-own agreements? Number one, the option fee and the additional monies you pay every single month typically are non-refundable. So if you pay, let's say $5,000 as the original down payment at the beginning of your lease period, and then every month you pay an additional $500 towards the down payment of the home, at the end of 2 years, you will have paid $17,000 in addition to the amount of rent you've paid to the landlord. And if you do not qualify for a loan, or if you change your mind, you could potentially walk away from that $17,000. Number two, repairs and maintenance. If you're someone who's accustomed to renting apartments where you don't have to maintain a property, you don't have to take care of any repairs, getting into a rent-to-own agreement right away where you are going to be responsible for taking care of the property, you may be responsible for some of the minor and major repairs of the home. This can become quite expensive for a house that you literally don't own as of yet. Number three, the home could lose value. So for example, if you were to negotiate the price of the home at the beginning of your lease period, And let's say you negotiate to pay $200,000 for the home, and the home is actually worth $200,000. At the end of your lease period, the home may have decreased in value. The home may now only be worth $175,000. And at $175,000, you will not be able to get a mortgage from a mortgage company, because no mortgage company is going to pay more for a house than what it's worth. Number 4, and I think this is probably the most important con, or the most or the biggest disadvantage of rent-to-own properties, and it is you have to do some research on the seller. You cannot make an assumption that the seller is totally squared away with all of their financial obligations on the house. You need to make sure that you do some research and find out that the seller is making their mortgage payments on time, that they're paying their property taxes, and that they are up to date on their homeowner's insurance. You also want to make sure that they're paying the water and sewage bills. If the home is foreclosed prior to your lease agreement, prior to your option period to buy the house, you will end up walking away with nothing. And on top of it, you will have to find a new place to live. The mortgage company that forecloses the property is not going to honor any contracts you have with the current seller. So it's very important that you find out that the homeowner is on top of making their mortgage payments. In conclusion, I want to give you some tips that I think would be important for you to keep in the back of your mind if rent-to-own is something that you are considering. Number 1, make sure you work with your own attorney. Any contract that the seller presents to you is definitely going to be in their best interest. So you want to make sure that you have an attorney that is looking out for your best interest. And it's always good to have someone that's advocating for you and negotiating on your behalf. Number 2, hire professionals. At the time of the lease agreement, whether or not you negotiate the price of the home at the time that you sign the lease agreement or at the end of your lease agreement, you need to know where the market is currently, and you need to know the value of the home now. You may not want to pay for an appraiser to come out at the beginning of the lease period, but you should at least work with a real estate agent for a comparative market analysis, so that you have an idea of the value of the home, and you have an idea of where the value of that neighborhood is heading, whether it's trending upwards or trending downwards. I would also suggest getting the home inspected. A home inspection is going to cost you a few $100s, and it's going to take a couple of hours of your time, but it's good to know the health of the home. If you're moving your family into a particular property, it would be good to know if there's any mold, if there's any leakage, if there's any wood destroying insects, making sure that you know where the cutoff valves are for the gas line, for the water line, knowing about the electrical panel. It's good to know whether or not everything is operating correctly, and if there are any things that need to be updated or anything that needs to be changed. A home inspection will also let you know the age of the roof, and the age of the mechanics of the home. Last but not least, you definitely want to get pre-approved. You should have an idea of where you are financially at the very beginning of the rental lease, so that you know where you need to be at the end of your rental lease, so that you can qualify for a mortgage. The last thing you want is to get to the end of your lease period and the seller is expecting you to now get a mortgage and purchase the home, and your finances still aren't up to par to the point where you can get a traditional mortgage. In that particular case, you may have to walk away, leaving all of the money you paid on the table, or try to renegotiate a deal with the seller to extend your lease period and give you enough time to get yourself in a better financial situation. I hope this information was useful. If you have any questions, comments, or concerns, definitely reach out. Thank you for watching. Please comment, like, and subscribe. If you have any questions, please ask, and stay tuned.